Well, I want to thank everybody for joining us today, and especially the MicroCap Club community. This is our first ever MicroCap Business Breakdowns. The purpose of these conversations is to highlight some unique businesses in the microcap space. As we all know, microcaps make up about half of all publicly traded companies. We have 900, I think, companies now profiled in our forum. And not all microcaps deserve the attention, but there are quite a few unique businesses in our ecosystem, and that deserves some recognition. And so our goal with MicroCap Business Breakdowns is to highlight these unique businesses in the highest quality way that we can. And the way we're going to be doing this is bringing on the leaders of these companies, and also by inviting the MicroCap Club member investor that knows this business best to help lead that discussion. The way we structure these conversations maybe in the future might be a little bit different than we do today, but the way this is going to progress today is we're going to have Todd Cravens, the CEO of GLXZ Gaming, give a short presentation into the business, just so that everybody has a similar kind of baseline of knowledge into the business. And then Artem Fokin is going to be joining me, and he's going to help lead a discussion and question set into the business, the strategy, the competitive landscape, the bull and bear thesis. And then we'll open it up to questions from all of you. And the way that you would ask a question is in the bottom of your Zoom box, there's a Q&A button. If you want to click that Q&A button, go ahead and feel free to ask questions there, and we'll try to get to them by the end of the conversation. So before we get started, maybe I'll just give a quick disclaimer. The purpose of this presentation is for informational and educational purposes only, and should not be construed as a recommendation or purchase or sell of any security. MicroCap Club is not a registered investment advisor. MicroCap Club, its partners, members, subscribers, affiliates may or may not hold positions in one or more securities mentioned on this program, and may trade in such securities at any time. Do your own due diligence and seek counsel from a registered investment advisor before trading in any security. So the business we are breaking down today is GLXZ Gaming. And GLXZ Gaming is the largest independent provider of proprietary casino table games in the world. GLXZ currently has an installed base of over 6,000 gaming tables in over 600 casinos. The company also licenses its IP with iGaming sites worldwide. In 2022, more than 2 billion wagers were placed on GLXZ iGames across 1,000 iGaming sites. GLXZ trades on the OTC markets under the symbol GLXZ. The current enterprise value is around 100 million USD. GLXZ Gaming was actually one of the first companies profiled on MicroCap Club back in 2011 at around 25 cents per share. The stock now trades around $2.50 per share. It's about a 21% CAGR, over 12 years, not too bad. Quite a few investors that I respect are involved with GLXZ Gaming, and I think probably a lot to do with the consistency of revenue and the close to 50% EBITDA margins that attracts some quality-focused investors. And one of those investors is Artem Fokin, who is joining us today. Artem is the founder and portfolio manager at Carocon Capital, and Artem's also been a MicroCap Club member since 2016, I believe. So Artem, thanks for joining us today.
Cool, pleasure to be here.
And we also have Todd Cravens, CEO of GLXZ Gaming. I think Todd has been the CEO of GLXZ since 2017. Todd, thanks for joining us.
Thank you for having me. I appreciate being here. I apologize if I used the cough button a lot. I picked up a nice little cold when I went off to sunny Albany for the weekend. So I'm back, but I appreciate you guys inviting me on. Thanks.
I think a good place to start, Todd, would be maybe diving into your past, going back to when you were a younger Todd Cravens. I'm curious, when did you first get into gaming in general?
Yeah, so I actually grew up in the coin-operated amusement industry. So my father was the 14th employee at a company called Nintendo. And so I grew up from there. I used to go to the trade shows when I was 4th or 5th grade. I'd write reviews of the games from the trade shows, and they'd put those in the rags. And then when I was 13, I bought my first game, and I put it out into a convenience store. And since I didn't have a license, a driver's license, I used to have to run service and collections on a bicycle. So I started doing that and kind of grew that route for a bit. And then when I was in college, started opening up some arcades or family entertainment centers, as they're called now. And then from there, my father and I had a small sales and marketing company, which was kind of struggling, and we did okay. And then there was a company, very small, that had a game that they sent to us and said, we've gone to everybody else, about 6 or so other companies, and we were kind of last on their list because my father had actually testified against them in a court case. And they said, we would like you to take a look at this game. And so they sent us this game, opened it up, and played the game. And my father looks at it. He's being the ultimate optimist and a great, great salesman. He says, we're going to sell 2,500 of these games. And I looked at him, I said, there's no way. I said, this is a golf game. No one plays a golf game. Well, it turned out that game was Golden Tee Golf. And we ended up, I think, selling 110,000 of them. It was the best selling game since Miss Pac-Man. So that's how I paid for college. And then after that, I went into the operations and game development side of things. I went to work for a guy by the name of Nolan Bushnell. And Nolan is the guy that founded Atari. And he also started Chuck E. Cheese. He was the inventor of Pong. And Nolan was and is a genius. He'd come to work with 30 ideas. 27 of them were horrible. 2 of them were really good, and 1 was amazing. And then the very next day, 30 new ones. So I got to learn how to work with a mad genius there. And then from there, I went to work for our biggest customer, a company called Betson Enterprises, and I ran distribution out of Chicago and west of the Mississippi. And I ended up, it was a 4th generation New Jersey Italian family business, and I'm the only Mick at the table. So whoever yelled the loudest at the table got the floor. So I learned that. And then during my time there in Chicago is when the state of Illinois legalized video lottery terminals. And that was essentially how I got into gaming. Took a while for those machines to get legalized and put out there. And so after that was done, I was recruited away to run a small table games company for the Americas called TCS John Huxley. And during my time there, we made basically chippers and roulette wheels and displays. And it was great when you had a new business opening, but it was kind of lumpy. And so I was looking around for businesses that maybe could even out the business, a recurring revenue business. And that's when I kind of found Galaxy Gaming. And so I tried to put the owner of TCS and then the founder of Galaxy together in a room. And they were 2 very, very big personalities, and that didn't work. But when I decided I was going to do something else, Galaxy Gaming called me and asked me to come on board. They didn't know what they wanted to do with me. And so you do what you do with anybody else, and you say, okay, you are VP of Business Development. And then, within 6 months or so, we had some regulatory issues, and that required me to step into the position that I'm at now as president and CEO. So I've essentially done the same thing for a long period of time, and that is either in a video game or on a table that you have to give value and entertainment to somebody 1 credit at a time. It might be 1 quarter at a time, or it might be 1 chip at a time, but you want to go in there and entertain someone, create some competitive tension. But I've essentially been doing this for 40 years or so. So
I appreciate that background. Why don't you go ahead and go through the investor presentation quickly?
Sure. Go on to the next page here, Felicia. Forward-looking statement, very similar to what Ian said. And everyone, I'll try and go through this fairly quickly because we've had this up on our website, and Harry and I have, who's our CFO, we've spoken to it. But I just want to make sure everyone's got a baseline moving forward. So go ahead. So we always put this up here, and we always put up our core values. And sometimes these are mushy, cushy feelings. I sent an email out to the entire company for the last 6 years, really kind of aligning everyone. And at the beginning of each one of them, we have our net promoter score as well as these core values. I think this is the stuff that is maybe the soft skills or the soft things, but this is what we do, and it's what sets us apart. Been around for almost 25 years. We're here in beautiful Las Vegas, Nevada, and 46 folks. Next. So what we do. So if you go into a casino and you see a table game, what we do is we create extensions to public domain games like blackjack or craps or roulette, and at times make our own games. And why do we do this? Players are looking for some diversity. Players are looking for more volatility, if you will. If you sit down at a blackjack table, paying 6 to 5 on a blackjack is not nearly as exciting as 11 to 1, or putting $5 down and winning $50,000. And why do our operator customers want this? They're looking for house edge. So if you're a really, really good blackjack player, the house edge is about 0.5%. If you play one of our games, those house edges can go from anywhere to 5 to 20%. Next. So this is where we were. We backed into a shell company in 2009. And in 2011, we purchased 21+3, which is the #1 side bet in the world. Along with that, we ended up buying 3-Card Poker for the UK. And as I mentioned earlier, we had some issues. And so in 2019, we redeemed the founder. We live in a very, very regulated world in gaming. And what that means is that regulators from every state, from every tribe, get very, very deep into personal backgrounds and company backgrounds. And we live and die by these privileged licenses. So the founder of our company had some issues in California and in some other places. And so, as I mentioned, about 6 years or 6 months after I joined the company, I came in as CEO as we made some structural changes and the founder stepped down. And our current chairman, Mark Liparelli, came in, who used to be head of the gaming control board. So we thought we were good at that point. And unfortunately, what we did for Nevada did not work for other jurisdictions. And the founder was unwilling to make any more arrangements, if you will. So we took a really unprecedented step in 2019, and we redeemed the founder shares, roughly 60% of the business for $1.68 a share. And we gave him a note. As you can imagine, lawsuits started going back and forth, and I'll get to it in a minute. But in 2020, we purchased a company called Progressive Game Partners. And Progressive Game Partners was our digital distributor for all of our iGaming rights, as well as the rights for some other games. And this was really the launch for us to take control of our business in that channel. And then in November of 21, we settled the litigation. During that period of time, we went through COVID and a few other things, and we took on PPP, we took on a Main Street loan, and we also had a bank note. In order to pay off the founder, which was about roughly $40 million, when you had a Main Street loan, you could not retire any debt before that one. So we ended up having to do a full $60 million note to redeem all of that debt. We did that with Fortress, and that's what sits on the balance sheet today. So someone that's new to the company that doesn't know the background at times can look and say, boy, there's a whole bunch of debt on there. But that debt was incurred from purchasing 60% of the outstanding shares back in 2019. Next. So most of what we do is recurring revenue. We sell some things very, very rarely. Our brands, we're very, very focused and only do table games, and they're very, very well known. As Ian mentioned earlier, we do have pretty good EBITDA margins, and hopefully those will continue to grow. The thing that I will brag about, and probably one of the only things I'll brag about on the company, is our Net Promoter Score. This is really, really important to us. And if you remember, I said that I send out an email to the entire company every week. The weekly and the 12-month trailing Net Promoter Score is on that every week. And it's very important to us. World-class companies are between 30 and 70 on a Net Promoter Score. I cannot remember the last time we've been under 90. And then in regards to the management team, Harry and I have, who's the CFO, we've been around this business for over 6 years now. We finish each other's sentences. I'm very, very lucky to have Harry as a partner. And one of the things that's quite good right now is the development of the team and making sure that this does not retain the Todd and Harry show. Next. So let's talk about the land-based gaming. So here's a good example of what you would see as one of our games, and then we offer felt. So what we do is we give an operator the ability to print a felt with our content on there for a monthly fee. We don't even physically make the tables or the felts. They do that themselves. And then at times, what you'll see in the top right there, that's a progressive system. So we'll put in some electronics and some chip readers on there. And that is where we'll do things where we have multi-denominational bets, and people can then win 5 and in some cases 6-figure payouts. When we put progressives on our content, it becomes very, very sticky. Next. So this is what it looks like in regards to how do we make money with our customers. Let's say we have a base game, let's call it Blackjack. When we license something like 21 plus 3, we charge for that. In more and more cases, Blackjack games are having multiple side bets. So it could be 21 plus 3 and Lucky Ladies, etc. In the iGaming side, we own 5 of the 7 top Blackjack side bets in the world. And we do very well in the land-based as well. As we start to add in progressives, we charge for the multiple meters that we may have on that table. So let's take an example like we just showed in the last piece where we had a game and we had 2 bets. So we would charge for Lucky Ladies, 21 plus 3, and then 2 meters. Those would be 4 billable items. Next. Some of our land-based customers, some of them you would know, some of them you may not know. Over in EMEA, especially in the UK, on the Blackjack side of the business, we have about a 95% penetration rate. We also own 3-card poker in the UK, which is really, really strong over there. So outside of the North American world, the UK is our biggest area and starting to expand a bit more into EMEA. So this is where we are. We picked up the rights about a year ago to the land-based rights to Perfect Pairs. And why that's important is that when we bought PGP, we had the digital rights. Perfect Pairs is the #2 Blackjack side bet in the world. And once we had developed a relationship with the owner there, he gave us land-based rights in more areas. So that has really opened up South America to us. It started to open up Europe to us a bit more. But as you can see, there's a lot of black on that map and a lot of places for us to go in the land-based world. Next. So how do we grow? We need to be into more casinos. Right now, we estimate that we're probably in 1 in every 6 or 7 casinos throughout the world. We need to penetrate deeper into large TAMs for families. So we do really well with Blackjack, which is the #1 game in the world. #2 game in the world is Baccarat. And we need to continue to do what we've started, which is penetrate into there. And then you can start thinking about places like roulette, et cetera. So once we get a table, what we want to do is make sure that we get content on that table and we provide more value through progressives or trackers or things like that, where we can add billable items to those tables. Next. So iGaming. So basically, what iGaming is that in regulated markets throughout the world, people can get online through a browser or through an app, and they can play casino games. So as you can see here, up in the top, that is what we call an RNG game. So basically a graphical representation where you can play blackjack. And as you see there, we have 3 bets, Lucky Ladies, 21 plus 3 extreme, and 20 or progressive, and then 21 plus 3. We also have a progressive over in the top left there. Then down below, you see that person who's sitting there. That's about 70% of our online business is what we call live dealer. So you'd get on to, for those of you in marketplaces in the US that have iGaming like New Jersey or Pennsylvania, you would go to BetMGM, click on there and say you want to play live dealer. And it would literally take you to a studio where you have someone like this that are dealing our games. So this live dealer part of the business, like I said, is about 70%, and the RNG is about 30%. So some of these names you would know, some of them you may not. Probably know more of the more customer facing like DraftKings or FanDuel and things like that. And then many of what you see here are the B2B providers. So what we do is we'll do deals directly with the B2B providers where we'll license our content to them for the felt part of the business to deal on live dealer, or we'll go and do a deal with a Bet365 or someone else where they'll take our content and they'll build RNG versions of the game. So this is what the revenue model looked like before we bought PGP. So you had an online casino. They would have a platform provider like, let's say, Evolution or Playtech. They would pay PGP, and then we would get what was left at the end. Obviously, when we bought PGP, we eliminated that and made a little bit more efficient business model. And then what's happening now is that we still do a lot of the B2B providers, but then we have online casinos where we're doing direct deals with the DraftKings and the FanDuels of the world. And that's important for a couple of reasons. The economic model is a little bit better for us. Most of the time, they're building their own RNG games. And why that's good is if they have built the games themselves and they've got a vested interest, we get better placement on there. They promote those games better, and therefore we typically earn a little bit better. So here's where we are when you think about the world of iGaming. It is much more vast than the land-based side of things. South America, one of the fastest growing areas, as well as Asia. But a lot of people have eyes on North America. So right now, you have Canada. We're in all of these places. And then you have 6 states that have legalized iGaming right now, 4 that really matter. And we are big believers that we're going to see more iGaming here. As you probably, if you live in the United States, you probably know that sports betting and online sports betting has really grown rather rapidly. There's 34, 35 states that have it. And that's a 4 or 5% margin business. The iGaming business is a much better business than that. And we're big believers that the sports betting is kind of the lead blocker for iGaming. We haven't, and we don't anticipate any new legislation this year, but we do think we're going to start to see some in 24. But to give you an idea, only 11% of the US population currently lives in a state that offers iGaming. So a lot of upside there. So mentioned earlier, we did 2 billion wagers with our content. And that's not on the base game, that's on our stuff alone. Last year, that number should grow in 23. If you take all of the iGaming revenue in the United States, including all the slot revenue and things like that, our content represents 2% of all of that revenue. And right now, we're currently, I think it's close to 1,400 casinos throughout the world. So basically, what we want to do, and we haven't really taken away from this in any time recently, is that we want to own or create the best table game content in the world. And then we want to push that through various channels. Today, that's land-based and iGaming. We think there's other places to go to, more into table games, electronic table games, iLottery, social. But we want to continue to develop the tech around it, the content around it, and then push through different channels. Here's kind of where we have looked on some high level numbers. We've given guidance for about 26.5 this year. You can see the impact of 2020 when we sent out a press release saying that we weren't going to charge any of our customers during the closures. But over time, we're basically 15 to 20% top line growth rate. And that's kind of been the mantra since Harry and I have been here. Next. EBITDA. We think we're going to grow about another 20% on the EBITDA line. And when we say that we want to grow between 15 and 20% top line, our strategy continues to be to grow those expenses at half whatever that rate is. So we think over time, our EBITDA margins should get even better than they are today. So 47.2% this year is, I think, where we're going to end up. That means by Q4 of this year, I would be pretty disappointed if we didn't eclipse the 50% margin, and get set to go into 24 with the winds at our backs. We don't spend a lot of money. When we have spent some money in regards to developing a little bit of a new system that we're in the process of launching. But as we go into a new market, as we go into a new state on iGaming, it doesn't cost us any more money. As we go into a new state or a new jurisdiction in the land base, it's usually around compliance and regulatory costs, but our free cash flow is pretty good. Next. So again, just real quickly, I mean, we have a pretty simple business. We want to own and create the best table game content and push it through various channels in there. The best way for us to stay sticky is to also do a really, really good job on the tech side of things. And if we do those things the right way, like I said, the top line for what we look at over the next few years continues to be 15 to 20% top line, and expenses about half that. So that's it in a nutshell. I got through that without coughing my face off, so I'm happy.
Well, Todd, thank you so much. That was very informative, and thank you for joining us despite your cold. I hope you will feel better soon. Hello, everybody. And just a quick disclaimer, since already Ian gave his, Todd gave his, I cannot pass on the opportunity to give mine. Caracan Capital LLC and all its affiliates own Galaxy Gaming shares. So I'm obviously biased. Keep this in mind. And I'm actually in China, which is past midnight here. And my goal of the trip is to find out whether Galaxy dominates local market. So I'm joking about that part, but I'm indeed in China. It's indeed past midnight here. So, Todd, let's start with this question. Very often when I talk to fellow investors, the question comes up. Okay, Galaxy owns 5 out of top 7 blackjack games. They are developing a lot of things in Baccarat. They have some other exciting things they're working on. But what really prevents knockoffs? What prevents Ian and Artem, who now learn that you're about to approach 50% EBITDA margin by the end of the year? What prevents us to creating a knockoff? Because you cannot patent math.
Yeah, you can't patent math. You're right. About 9-ish or so years ago, there was a Supreme Court ruling that basically invalidated patents around table game content, basically saying you can't patent math. So since that time, 21 plus 3 has earned more money for us in revenue every single year. But in regards to what are the barriers, basically the barriers come to the regulatory side of things and the technology side of things. I think the folks that are out there that are going to create and go out with knockoffs are already the existing competitors that we have, right? For you and Ian to start from scratch and build a game, first of all, both of you guys would have to get licensed, right? And so let's say you guys wanted to go into Nevada. The check they would ask you to write for your personal background check would be $75,000 each. So there's $150,000. And then you would have to get your game patented, or not patented, but you'd have to get it certified through the gaming labs. And then for you to have any real chance, you'd also have to develop some technology around that for progressives. So I'm less concerned about folks that are on this call to come up with the next great knockoff and come after us. It's something that's probably more concerning coming from the AGS folks and from the Light and Wonder folks. And we've been dealing with that ever since I've gotten here.
Okay, so since you touched upon Light and Wonder and AGS, I must follow up. So, and by the way, for those who are listening, Light and Wonder is formerly known as Scientific Games. So I know it took me a while to remember that they changed the names. So just want to give out that for everybody. So what it's like to be competing with Scientific Games, who is 800-pound gorilla. It's a little bit of David versus Goliath. So how does it feel to be Goliath of table games?
Well, we're David. They're Goliath.
Sorry.
Yeah. I realize it's past midnight back there. So honestly, I mean, I love it. I have always been kind of at the underdog company for whatever reason. The thing that probably motivates me the most on stuff is competition. our head of marketing is on this call right now, and we had a conversation just yesterday about being competitive. And so I love it. And the best thing for us is that we have one track focus. All we do is table games. So we wake up every day. We know exactly what we have to do. And if we don't, then they just have to wait till Monday morning when I send everybody out saying, hey, this is what we're focused on. This is the number one priority in the company. What are we going to do? Unfortunately for a Light and Wonder and an AGS, they have a lot of different things that they have to deal with. And table games for them is very, very small. If AGS was to triple their table games revenue, it wouldn't matter. If Light and Wonder added 50% to table games, it wouldn't move the share price. So I find us in a pretty interesting space because, you know, if we have a hit game or if we go and land a big deal, it matters. And so, you know, I wake up every day thinking about competing against those guys. I'm pretty much guarantee you they don't wake up thinking about me, which is a good place to be.
So it's focused versus unfocused.
Yeah. Focus, I would say focus, and we're, to a person, we're pretty competitive within the company.
Got it. Okay, awesome. So you had a wonderful slide 9, where you showed your revenue build up. There is a base game, let's say blackjack, it's someone else's public, then you add felt, and you go through, etc., etc. So would it be possible for you to give a sense to the audience of unit economics? What it's like when you win a casino, and a casino might have 1 table or 10 tables, and you start adding those units. What typically a revenue per unit or per table? What type of margins do you generate within a property, within a 4-wall EBITDA, so to speak?
Yeah, so we're pretty careful. I mean, I wouldn't get to a point in this answer where I'm given specific numbers. But as an example, when we have a base felt game or a side bet, so let's take 21 plus 3. Typically, when we add a progressive on there, we triple the revenue we make from that table. So we've started to go back and list out how many casinos and tables and billable items that we have, and we disclosed that in the K this year. And so if you look at that and you say, okay, they typically have about 10 tables per casino, and it looks like they have about 1.5 billable items per table on there. One of the things that we can get better at is that, number one, casinos, right? We need to get back to where we were pre-COVID in regards to that amount of casinos. But I think one of the areas that we're going to do better in is that I do believe we're going to go and get more tables per casino. And one of the reasons is that I think there's been just a fundamental change for us to say, okay, we're really, really focused on something where we can get a number of tables, meaning blackjack, meaning baccarat, meaning roulette, rather than a focus on a proprietary poker game that, coming out of COVID with so many people having issues with labor, those are some of the last games that are open. But if we have a good baccarat game, we're going to walk in there with the side bets, we're going to walk in there with the trend board, and we're going to layer that over 8 tables. As an example, I mentioned I was in Albany this weekend. I went to River Schenectady. Went up there, and we had just done an install with baccarat. And there were 8 tables with 3 billable items per table. So that would be over the average that we've been historically in regards to the number of billable items and tables within a place. So that is the focus and the fundament right now, fundamentally, that we're really going after is public domain games that we can get large numbers on, and then can we continue to add billable items? Our new product, the Galaxy operating system, I think allows us to offer more billable items than we've been able to with our electronics in the past.
Okay, thank you. That was great. Could you tell us about the stickiness of your customers when you lose them, how often, and what typical reasons? That's one part of the question. And second part of the question, how your legal agreements, contractual agreements are structured. Is it month to month? Is it multi-year? What's happening there?
Yeah, sure. So on the land-based side of the business, we rarely lose a customer based on game performance. I mean, that is a rarity. Where we'll lose them is if they're taking some games out So as an example, going back to Rivers, where I was this last week, they're taking out some blackjack games. They're going to do more baccarat. They're seeing a shift into that. So that could be a place where they're taking out some of the side bets. The other thing that'll happen is the competitors that we have, AGS and Light and Wonder, as I mentioned, they have other things, and the majority of their business is selling slot machines or systems. And so what they'll use is they'll use the felt part of their business is kind of a giveaway. So they'll come in and they'll undercut us on price or what have you. And then at times they'll go in and talk to the procurement person at a large multinational company and say, we're going to give you this game. It's very similar to the Galaxy game, and we're going to put that in. So that's what we kind of call the clear cut. And then we kind of come back in at the property level and we start to build things up because customers are looking for our content. And so this has been kind of the what we have dealt with for the last 6 years. The good news is that we don't get pulled for lack of earnings. Our issue is that when guys come in and they offer a copycat or something like that at a lower rate. But when we model our business internally, I think of it very similar to a SaaS business. So we have kind of a we have a monthly recurring revenue, and then we factor in a churn rate. And that churn rate is just what you're talking about, removals and things like that. And that churn rate is in the very, very low single digits when we model it. So we watch that and we say, okay, are we getting above it? Are we getting below it? Obviously, good months when we stay below those numbers. But that is really how some of our product gets taken out. In regards to how the contracts have worked for the land-based, we inherited basically month to month with our customers. Bad news about that is that it's month to month. The good news about it is that you better bring it every month, right? Your content better perform every month or they're going to take that away. But over the last several years, there has been a focus on a movement to multi-year or year-long agreements. I think this year alone, I think that we're 25 or so multi-year agreements. So one of the things that we'll continue to do is to lock those customers in for a longer period of time. So I think we're starting to take away that part of the vulnerability of the month to month.
What's the conversation is like with your customers when you come and say, hey, we've been on months to months, here's the contract, please sign your page, please sign a date, and now you are in the annual contract or maybe even 3-year contract. What's the conversation like?
Well, the conversation a lot of the times takes place when we're about ready to put in more electronics, right? So we're making an investment and putting things in. And when, as I mentioned, when you put in the electronics, I mean, you're looking at potentially tripling the revenue off of those tables. So there'll be times where we'll say, look, for a 3-year deal, there'll be a small discount on there. And most of the times, we're fine with that type of give and take.
Okay, understand. So when we look at the land-based business, you're still below where you were in 2019, pre-COVID. Yep. And recently you spoke that your goal is to get back to the level for land-based alone. Just to be clear, iGaming is on top of that in sometime in 2024. So what gives you confidence that the company will be able to get there?
Well, I think one of the biggest things, I mean, so what we dealt with obviously between that time is we dealt with COVID, right? We had some customers that closed forever, especially over in the UK. And then we spent a lot of time and effort on an electronics product to graduate from our BGS product out there. It was called Triton. And it was pretty much a disaster. And I waited too long to pull the plug on it and get that product out there. And as I mentioned before, if you don't have a really good technology system to cement your felt to the tables, you're really vulnerable. And that happened to us. So I think it was kind of the trifecta of all of those things together. Now, we have kind of revamped things, and we have just come out of the lab and started shipping our new Galaxy operating system with, I would say, very good early success with things. We've had more success with newer customers coming on board. And so, everything that we're modeling right now, I think brings us back to those pre-COVID numbers. I would say in the first half of next year is kind of where we're targeting, where I want to get to, as long as I don't cock it up anymore. I would tell you that the electronics thing really sits at my feet, and but I think that we've been much better focused on the newest system that we're coming out with now.
So Todd, when I think about growth drivers for the land-based part of the business, I have a few in mind. Yep. One is expansion within the United States, such as California is a big state where you don't have a very strong presence, but you could build it over time. Yep. Another lever is international expansion. You recently announced, several months ago, you announced an arrangement with the distributor in German-speaking countries in Europe, part of Switzerland, Germany, obviously, plus Austria. That's another driver. Then you are adding more games, your initiatives in Baccarat, big in Asia, big in other countries as well, but very big in Asia. Then you're innovating on the products such as Galaxy operating system and adding more there. So that's another driver. And I'm sure I'm missing a few right now. If you were to rank them in order of importance and then go down to the least important, what would be the ranking?
I think the first thing would be the Galaxy operating system, because it does two things. It cements the felt that we have in there, right? So it's as offensive as it is defensive. We have some new features in there that aren't available on anybody else's product, with some things like dynamic progressive. So, you could be looking at 3 to 4 billable items on there. So I think that's number one. And the good thing about that is that that's something that covers all of the products that we have in there worldwide. So it's not something that is just territory focused. Secondarily, I would say that the markets, just Europe in general, not just Germany, but Europe is going to be more important for us. It's early days with where we are now, I would say, in 24, as well as South America. But to your point, the largest table games market in the United States, California, and we remain underpenetrated there. We can, bemoan that we were a victim of timing. Again, we got our license in January, right before COVID, and then the guys, our competitors, went in there and locked it down. But we have, I think, the right content now to get us in there. So we have continued to populate California, but I don't think that we have to do anything crazy to maintain and accelerate our growth, right? We have to execute in the markets that we're in today. We have to get a little bit better in Europe, a little bit better in South America, and GOS needs to go out there and take its rightful place as the best product in the market.
Okay, thank you. Thank you for the ranking. So let's shift gears and go to iGaming, which is a fascinating topic in its own right.
Sure.
And where I would like to start is that for B2B iGaming providers, incremental margins are generally very, very high. But in your case, I feel like they're probably even high, and probably your business is even more attractive. So I believe the last jurisdiction where you expanded was sizable was Ontario, when Ontario went legal. So could you tell us what type of efforts on your part it involved to expand into Ontario?
None. The good news about our iGaming business is that we have multi-year deals with the B2B and the B2C providers out there. And most of those deals include wide-ranging territories, because we've taken into account where these people may go, where iGaming may open up. So if and when Ontario opened up, I didn't do a new deal with Evolution. I didn't do a new deal with Bet365. The existing deal went with it. And the good news for us is that there's two things. They've already built the games, right? So they have a sunk cost there, and they already know that the games earn and work. And so for them, I think it's a very, they look at at the opening costs as well and go, okay, game's built, know this thing's going to earn, so we're going to drag that stuff along. And that's been the case, be it in the individual states as they've opened up here, or as South America's opened up, or as Asia has opened up. But we don't go in and do an amendment or a new deal. We get drug along. And so, doing most of the efforts and the upfront part of it allows us to take a nap, when the new places open up.
Excellent. So you mentioned evolution, and another common theme that comes up in conversation with fellow investors is how big evolution is. They're sizable customer deals, concentration is disclosed in your 10Ks and Qs. So how do you feel about that customer concentration?
Obviously, there's goods and bads of it, right? Evolution is a really, really well-run company. I think Martin, who's the CEO of the company, I think he's probably the best executive in gaming. And they've done a really, really good job in building that business. But, you have to be really careful in regards to when you have too many eggs in one basket. And, the question comes up, what happens if they decide that they no longer want to play with us and they want to do their knockoffs, et cetera. So, firstly, I would say that we have a very open relationship with Evolution. In fact, an hour after I get done talking with you guys, I'll be talking with some of the folks over at Evolution. But remember that Evolution is a B2B provider, and so they have about 1,000 customers. The majority of the gross gaming revenue that is created on Evolution's platform goes to the operator. And what do we do for someone? So if someone is online and they're a really good blackjack player, that operator makes a 0.5 point on the base game as a house edge. On average, our blackjack side bets make about 5%. Our baccarat side bets make about 9%. So a couple of things there. I don't think, everybody says, well, what if they go away? I said, I don't think that Evolution wants to pick up the phone and call all their customers and say, we no longer offer those games, because they make a lot of money for their customers. And then number two, you have other live dealer providers like Playtech and Pragmatic who'd be happy, and already do, offer our content. And so they can slide in there. So, but I don't think it ever gets to something like that. We have a really, really good relationship. I kid around all the time that, I run the smallest gaming company in the world and Martin runs the largest gaming company in the world. And we have a pretty open dialogue in regards to what the relationship is like. So would I sleep better if it was a little less? Yes and no. But, as I said earlier, they drag us into these new territories. They take us to new customers. They are a really, really good partner. So it's a balance, but I don't think that I would want them to go away. I think on balance, they're a fantastic customer and a fantastic partner for us.
Okay, good to hear that. Todd, so for a company that is in microcap land, you've done several transformative acquisitions over the years. Some before you, 21+3, some while you were there at PGP. You've also done a few smaller tuck-ins, and you tend to acquire, based on my observations, properties, products that you know well because you're already working with them. So you know what you're buying, not based on 2 weeks of diligence, but instead based on a multi-year relationship. So today, as you look into the future, what type of M&A opportunities do you find attractive? And what type of acquisition criteria and valuation are you looking for?
Yeah. So, if we go back to kind of what the opening mantra is that we either want to own or create the best table game content in the world, and then be able to shove that through different channels. That's really kind of the North Star for us at this point of the company. So you mentioned, a couple of small tuck-ins. We bought Bonus Craps, the remaining rights of Bonus Craps, out in November. Why a deal like that for us is pretty good is that we have been distributing that product for years and years and years. We knew we were about ready to launch that game with DraftKings on the iGaming side, so we knew that the revenue was going to increase, and we felt really, really comfortable in purchasing that game. On the land-based side, we were actually just about ready to launch some new dice trackers that you had to have bonus craps on, so another billable item on a craps table. So I think, when we did that deal, I think it was something like a 17-18% return on that deal. It's been better since then. The revenues have gone up. So we look at those types of things. I would tell you that it is going to be games that do a couple of things. There'll be, if we're thinking about content, it would be games that have are going into large addressable markets. So blackjack games, baccarat games, roulette type stuff. Things that would get us into a lot of places. Probably not those poker derivatives like we were talking about earlier. You're not going to get many placements in the land-based side, and in the iGaming side, they're about speed. So if there's 7 of us sitting around a table and we all have to make 3 decisions within the gameplay, takes too long. One of the beautiful things about Baccarat is that there's no in-game decision. You make your bet and you wait for the cards to get pulled. That's why Baccarat scales so well. Roulette in the online space, you can have an infinity amount of players on that table. So that scales very well. So when you walk into an Evolution, a Playtech, a Pragmatic, and say, I've got a blackjack, I've got a Baccarat, or I've got a roulette game for you that I think is going to do well, and they only have to build, say, 1 table or 2 tables, those are very exciting for them. So that's the type of thing that we'd look at. We would look at content that we have extensive knowledge about, either that we've distributed in the past or we've competed against. But I think there's a handful of those out there, and we're actively and constantly looking to build up the portfolio.
So Todd, historically we've done acquisitions also at very low multiples. You mentioned bonus scraps, 16-17% return, unlevered, before synergies, before you will hopefully grow the business even more. You also did PGP at a very low multiple. And I know that CFO, Harry, plays a very important role in your M&A. He's a very experienced individual in the space. So could you tell a little bit more about that dynamic when you do a deal, when you look at for a deal, evaluate a deal? What's the dynamic between you and Harry?
As I mentioned earlier, Harry and I pretty much finish each other's sentences. When it comes to the financial side of things, for the people that don't know, Harry was an investment banker for a number of years. Harry was also the CFO of Caesars, a much larger company. And for whatever reason, we've been able to wrangle him into our small little business, and he continues to hang around, and just a delight to work with. So this year we have 5 real strategic items. We collaborate on what those things are going to be. Sometimes those are M&A items or what have you. We set those out well before the year begins. We're through that process right now. I come up with a couple of wacky ideas, and Harry comes up with ways for us to pay for them. And so it's a real, I think, partnership in that. I would say that we're looking at things constantly, and we have a constant dialogue on there. And more than likely, we come together. There's very little pushback on each other in regards to saying this is absolutely crazy. It's more of a how do we get this thing done?
I just wanted to remind everybody, if they have any questions, to input them in the Q&A button at the bottom of your Zoom screen, and we'll try to get to them. We're going to try to wrap this up another 10 minutes, 15 minutes. Maybe a quick question I have for you, Todd, is you mentioned Harry a couple of times. Are there any other folks on the team that kind of make up the A team there at Galaxy?
There are, and I would say that outside of the individual call outs here, we have been running a fire drill for probably a good 4.5 of the 5 years we've been here, dealing with founder issues, dealing with COVID, and dealing with all that type of thing. And so a lot of it has been, as we laughingly call it, the Todd and Harry show. But over the last 2 or so years, what we're really starting to see is a deeper and wider bench folks. We have a big group of 30 and 40-year-olds right now that are really starting to take over more and more of the day-to-day stuff that allow Harry and I to level up and work on M&A, work on the strategic stuff, and let these people run the individual units. And so, we have, I think, a really, really strong team to it. I would tell you that over the next 2 to 3 years, I think we have to get a little bit deeper and we have to get a little bit wider. But we want to make sure that if and when, Harry and I walk out the door, that we have a team that's ready to take it and run with it.
That's great to know. Building the bench always very, very important, especially in the microcap land.
Yep.
So, Todd, when you look at you spoke quite a bit about your high margins, about the fact that you want to grow revenue at the rate double, you would grow your OpEx. So when you think about your big OpEx initiatives going forward, what would be those? Because you clearly don't need to build another A-level team. So it's really a lot about R&D, new markets, regulatory filings can be expensive, as you pointed out already, and especially when you need to do them across multiple countries. So what are big OpEx buckets that we need to be thinking about?
Yeah, so I would tell you, the biggest bucket that we haven't necessarily had so much in the past was the money that we spent to develop GOS. Right, our biggest expenses are compensation, regulatory costs. Those are the big two items that really push the business. So I think as we get through the development of GOS, those development costs obviously start to come down. We're actually already starting to work on 2.0 in regards to some things that we want to add to the system that will show at G2E this year, which is our big gaming show in the fall. But yeah, for us, and that is why, we have pretty good cash flow rates on there, is that outside of doing something along those lines or spending money on licensing or opening up jurisdictions, those are really the big buckets from an OpEx standpoint. But once we have GOS tidied up, we're going to be, those margins, I think, will get even better.
Okay, great. So I wanted to ask you a question about leverage, and you explained in your prepared remarks in your presentation why the leverage exists and how it came on your balance sheet. So first question is, recently at another conference, you spoke that the right level of leverage for your business is not zero, given your high margins and very little capex. So right now, on the net basis, and looking at your guidance for 2023, you're about 5 times levered gross, and quite a bit if you look at net. So 3.8, 3.9. Again, I'm rounding numbers here, so guys, do your own. So what do you think is the right level of leverage for your business? When you feel like that's the right level?
I think we feel really comfortable probably in the low 3s for a couple of reasons. We can, even in these high rates, and we have obviously a floating rate right now, which when we did the deal with Fortress wasn't too bad, but we've jacked these rates up over the last 18 months pretty significantly, and we're touching 12.5% right now. If we get down into the low 3s, that puts us back into the traditional bank financing, if you will. We think that those spreads could come down about half moving forward. So we like that 3 level, just from a standpoint that, well, we definitely know we can service it. And number 2, we definitely believe that it's going to get us back into a much better rate situation than we sit today with Fortress.
Those savings, if and when you do refinancing, we're talking about 300, 400 basis points of savings, roughly, the way I'm here. And again, I will summarize it here quickly. You have a penalty, 2% penalty for refinancing until November 15, if I'm not mistaken, of 2024. Then that penalty goes away.
Of 23, it's this year.
Sorry, did I say 24? Remember, this is way past midnight here. So November 2023. So then your refinancing is a fair game. And you spoke publicly that that's your goal, that's a priority. What do you think are the key obstacles to getting that done?
Two things. We have to execute between now and then, right? We need the time to get the TTM down to a net lever, in the 3.3 or under. And then I think market risk. We got Janet Yellen talking about, busting the limit in June 1 of this year. And do banks tighten up with lending? A lot of the banks we talk to are regional banks. So how are they going to feel about things? So I would say it's market risk on the macro level over the next 6 months. And then on our side over the next 6 months, it's execution to make sure that we're able to get those leverage ratios where we need them to be.
Once you do refinancing, once you get to the level low threes, which you believe is appropriate level of debt for your business, what would be the main avenues of capital allocation after that?
Well, I think that we're going to continue to be aggressive in going out and finding things that, fulfill the basket that we want to on the content side of things. We want to go after new channels. We're only in 2 channels right now, so it might take a little bit of investment for us to go into these other items. And then we would use it for other traditional things. Obviously, if we got all those things done and the stock price stayed where it was today, it would probably be pretty interesting for us to repurchase some shares and get that return to the shareholders one way or the other, right? Going out and buying things at the right price point, or what we think is buying maybe back some of our shares at the right price point. I would tell you that it's what I look at as being a Cadillac problem, right? The question is, what do you do when you have too much cash? I'd much rather have that issue than kind of, where we were 2 or 3 years ago, trying to struggle on through with the COVID stuff. So
that's definitely a good problem to have. And since you mentioned Secretary Yellen, I will ask a little bit of a macro industry question. Historically, what the impact on casino industry, and you're more exposed to regional as opposed to destination, which is Las Vegas or Macau, etc. What typically the reaction of those industries in the recessionary environment?
Yeah, so a lot of time forever, everyone said that we were recession proof. I would say that we're recession resistant on things. I live in Las Vegas. I am just shocked at how many people just continue to come here and pay astronomical prices on things. And you wonder how long that continues on. But when you look at some of the regional markets and you look at, say, things over in Europe, I think what we are seeing a little bit there is we're seeing people still gamble. But let's say you're in Europe and you're in a country that also has iGaming. What's not happening as much is they're not getting in the car. They're not necessarily filling it with gas, going to the casino and having a steak dinner and then gamble. A lot of those people are staying at home and still gambling that amount. So for someone like us, that's just fine, right? Because we have a fixed fee with most of our land-based customers that we're going to get regardless, and then we make that money on the iGaming side of things. So when you look at the regionals, I think the regionals should hold up fairly well because it doesn't require a plane to come to Atlantic City or come to Las Vegas on things. So we continue to see strength in markets like Washington and other places like that. We have not seen a tremendous amount of belt tightening yet, but I'll be definitely watching it for the second half of this year.
Thank you, Todd.
Okay, we have a few questions in the queue, Todd, for you.
Okay.
First question on the land-based side. How much business closed in COVID for you guys?
So we probably had a total of 15 casinos that closed and never came back. Most of those were over in the UK world. And the other thing that really happened was that there was a big movement because of labor shortages and distancing, where it wasn't just that casinos closed, but we also had just overall tables removed. So, you had a situation for, a long period of time where they would only allow, say, 2 players or 3 players per table. That started to come back. So there was a move to replace tables and bring in electronic table games, which cuts down on labor and things like that. The good news is we do license our content to the number one ETG player out there, but it's not a huge number. But so it was a combination of casino closures and table removals as well.
Okay, thank you. Can you address how new RNG games may serve as a test laboratory for possible future live dealer games?
Yeah, I think that's really important actually, because when you have a live dealer situation, you have to build the game. You have to staff that 24 hours. So it's a commitment from these live dealer folks. And so it's another one of the reasons why our games tend to do well, because of the fact that we have proven games in the land base for that to come. So one of the reasons that we have started to build out more of our own RNG games, like a high card flush, like some of our other blackjack or roulette up or things like that, is that we want to prove the point that these games have legs in the online marketplace, and that they should spend that money to go and develop that in the live dealer. So we can make money on it, number one. Once it's built, there are no ongoing costs, number two. And number three, it can be a real proving ground to then flip it over to live dealer, whereas, as I mentioned, we make about 2.5 times the amount of money that we do on RNG games.
Okay, thank you. The next one. In 2022, AGS acquired Lucky Lucky from Aces Up Gaming. Were you shown that opportunity? How many opportunities like that in your industry, versus homegrown? What excites you more?
Yeah, so we were shown that opportunity. It was, in my opinion, overvalued. We didn't bid on it. The good news is we own the digital rights to Lucky Lucky. So we wish them all the success in the land-based, and hopefully that carries over into the iGaming portion, because we make money on that. So I write a check to AGS every month for
that. Next one. Given the psychology of the iGaming player, can you speak to how being the preferred blackjack side bet partner to Evolution and others builds a stronger brand around 21+3?
Absolutely. When you have 21+3 being played 1 billion times a year, that's a lot of impressions, right? I'm not a marketing guy or an advertising guy, but I know that having a lot of impressions is pretty important. And so it does become kind of self-fulfilling, if you will. And look, we lucked in on this. A lot of people ask the questions about, is omni-channel real? Well, I would argue that, we were very lucky when iGaming started. When iGaming started 12, 13 years ago in the UK and Europe, they looked around, they went to the casinos in the UK, and 21+3 and perfect pairs were on every table there. So they said, well, we need to put this on the iGaming stuff. And that became the default. And so, people ask, omni-channel real, this and that. I don't think we would be having the success we have today for iGaming if we didn't already have great content in those casinos back then.
And maybe a good closing question. Where do you see the company? I mean, obviously not quantitatively, but how do you think about the company and how it progresses over the next 5 years? What do you hope to accomplish?
I think over the next 5 years, I don't think we're going to stray away from what's important, right? We have to have the best content when it comes to table games. So I think the basket will be bigger. I think the basket will be deeper and wider. I think that we'll be in more channels than we are today. So if it were just in iGaming and we're just in the land-based, I think I would have not done a very, very good job on there. I think the thing that will be different will be data. I think that we will start to spend a lot more time working with data, which will help us develop better games. I think that we will start to deliver more data to our customers to help them make better decisions. And then I think maybe the most important thing is that I think you're going to see a much more seasoned team. And as I mentioned earlier, we're really starting to develop folks, and every day I think they get a little bit better. And the best thing, like I said, is that our team is pretty focused and pretty competitive. And so I'm very excited to watch the maturation of them. And so they can, let's hope that it's someone else doing this call with you 5 years from now that is going to be doing a much better job than I can. So that's kind of what I'm looking forward to.
Excellent. Well, thanks for spending over an hour with us. Thanks for being here. And thank you, Artem, for it's 1 a.m. over in China. So I appreciate you coming on board and asking some great questions. So thank you.